taking a look at the rand, we saw it briefly breaching 7 yesterday, which was a key psychological level, and managing to do that this morning yet again. What are you making of the kind of movement we're seeing on that local unit?
Morning, Alishia. Yes, it was a very good day for the rand yesterday. Firmed considerably, largely on the back of what we believed was very improved global sentiment. We had some positive manufacturing numbers and factory orders out of the US, and so the market seems to have largely shrugged off the disappointing ADP numbers that also came out yesterday. So on the whole, we saw risky assets in general enjoy a good day, and the rand strengthened quite considerably. As for where it's going to today, we think that should today's PMI data, both domestic and international, come out better than expected, then we'd be looking for the rand to strengthen further, possibly move as far as 682. Of course, on the other hand, should the data come out much worse than expected, then we'd expect the rand to retrace, possibly head for the 709 level.
What are the chances of things coming in better than expected on home ground, though? Because this follows on the back of trade balance data that we saw yesterday, that trade balance swinging back into a deficit, where some analysts expected to stay for a few more months to come. And of course, taking a look at some of the bugbears, it's the pressure on metal exports and increased imports coming into the country that drove that number.
Certainly from a trade perspective, the rand is looking increasingly vulnerable. As you alluded to yesterday, trade data for July came out and quite a considerable deficit was recorded, 3.9 billion, and that compares to a very large surplus of almost 5 billion in the previous month. What that's done to the trade account is that on the year-to-date basis, it's widened considerably from about 2 billion year-to-date in June to closer to 6 billion year-to-date in July. So that certainly is a negative impact, and from a balance of payments perspective, of course, the rand is going to look increasingly vulnerable. You have to remember that also a larger trade account is going to subtract from GDP figures, which have already been revised downwards. So the rand could also take a hit from a sentiment perspective on that front as well.
Of course, the rand's movement in line with many emerging market currencies. We've seen that strength filter through across the board. Taking a look at another emerging market, Brazil, it seems to have shocked investors by slashing its interest rate to 12% from 12.5% yesterday, and citing concerns of that slowdown in global growth. To what extent do you see this, getting the ball rolling in terms of monetary policy direction in emerging markets as they move to support growth more so than anything else?
Certainly, Brazil's move yesterday took markets by surprise, and of course does raise questions as to how emerging markets are going to deal with what looks like a rapidly deteriorating global situation. So we had Brazil already move on rates. This follows an earlier move by Turkey, which has also moved to ease monetary policy. Officials in Mexico have hinted in recent weeks that they may also look at easing monetary policy in a bid to support growth in its country. And of course, that is going to raise questions about South Africa. Is the Reserve Bank going to look to cut rates rather than hike rates? Of course, our view remains unchanged that the next move in rates will only be next year, and that's likely to be a hike. But of course, if you look at the recent poor GDP data, if today's PMI data comes out much worse than expected, then we'd probably have to revise that forecast and take into account an increased probability of an early rate cut as well.